So the sell-off in global stock markets continues. As I have pointed out yesterday, I expect to see some more days of selling before calm returns to equity markets. In fact, I expect a good rally after that. Now, oil has been falling quite sharply, and there is a talk that it could even go down to less than $40 a barrel. Now, this is something which always happens whenever stocks begin to fall so rapidly, or some commodities fall rapidly. There's an expectation that it will fall even further. Another reason this is happening is that we are nearing the end of the calendar year 2014, and a lot of fund managers need to balance their books. The fall in oil prices which has taken place, and thus in the energy stocks, the oil and gas stocks which the fund managers are holding, makes them sell these stocks so that they can get some losses which they can use to offset the gains on other stocks and other commodities which they may be holding. This is one of the very important reasons why you're seeing tremendous fall in oil prices. Of course, OPEC's outlook yesterday of a falling demand, world demand, has also helped to precipitate the fall in oil prices, but that's not the only reason. Now, coming back to what lies ahead, there is always some uncertainty in terms of what could happen. Fund managers say we don't know when exactly Federal Reserve will start raising interest rates, and as and when they do start, how how much they will raise interest rates, how much they are going to go up in the next year. Therefore, the outlook is uncertain. We really don't know what's going to happen. In India, the Reserve Bank of India is also expected to do, but they are expected to do the reverse. They're expected to lower interest rates because inflation is coming down in India. Now, people don't know when exactly they will start reducing interest rates, although RBI has given an indication about early part of 2015, but how much they will move during the course of the year is uncertain, according to most fund managers. And then there are other global uncertainties as well, like the elections coming up in UK. Extremely difficult to fathom what's going on over there. Various other uncertainties such as slowing demand in China, which is going to have an impact all over the world. China, being a major producer and consumer of commodities, is having a telling impact right now. But it really all boils down to what exactly and to what extent the fall in demand is going to take place in China. With such uncertainties, and if you do not have any roadmap ahead, how is an investor expected to invest wisely if there are so many uncertainties and each of these outcomes are binary? Either they happen one way or they happen the other way. In fact, so far, and ever since the Federal Reserve started quantitative easing, it was a jolly ride for stock markets because most of the outcomes were like a binary event. Either they went one way or they went the other. That's not going to happen now because quantitative easing is about to come to an end, and very soon interest rates are going to start going up. So those who were leaning on binary events, a very easy method, of index investing, is no longer going to be the case. This will be the time when the fund managers will need to bring out the actual skills. They will need to see where exactly the markets, the various individual stocks are expected to behave. What are the factors which will determine why some stocks will do better than the other? You just will not be able to do blind investing any further. The era of blind investing just on basis of binary event probability outcomes is coming to an end. So 2015, I think, will be a tremendous era in which the skill of a fund manager will now come into focus. Coming to the very near term, selling should be very heavy for a couple of days more, I believe, before calm returns to the markets. As I have pointed out even earlier, I think sanity will prevail sooner than later. And very soon, I'm expecting a good Santa Claus rally. So, Merry Christmas in advance. And don't get too perturbed. Don't invest wrongly. But I think we are nearing the end of the steep correction, as I pointed out in my book, 2014 Roadmap for Investors. All investors needed to do was just to follow the model that I had laid down, and the things that have transpired this year exactly turned out the way I had pointed out. And I'm quite confident in my forthcoming book. If you were to get hold of it quickly, you will find that the markets turn out exactly the way I'm going to point out. So happy investing and Merry Christmas in advance. Take care.